Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date, September 4th, 2014. I'm going to take a look at the Forex day ahead. Before I do that, let me remind everybody that if you like this video and want to see more of them, you can always subscribe to the Forex Live YouTube page by clicking on this button right here. Also, if you're interested in 24 hours a day, 5.5 days a week coverage in the foreign exchange market, make sure you visit us at ForexLive.com on a daily basis. And also, put your email in right here with your name, and we'll keep you in the loop of what's going on at ForexLive.com, and things are a-changing. Let's take a look at the, well, first talk a little bit about the calendar going forward here. Today we have German factory orders supposed to rebound from a minus 3.2% decline last month, plus 1.6. We already had the Bank of Japan interest rate statement, pretty much as expected, keeping the pedal to the metal as far as quantitative easing going. So they're going to keep it going until we get to 2%. Expect inflation to be 1.25% though, and to remain at that level for a while here. So we can expect the status quo in Japan and potentially more stimulus down the road if we don't get that pickup that we're expecting. Or that they're expecting, I should say. Bank of England interest rate statement coming out at 7 a.m. No change expected. They don't have a statement. They just have meeting minutes, which will come out another 10 or so days from this decision. At the last meeting, they had some dissenters, so it'll be interesting to see, but we're not going to get any information about that tomorrow. Unlikely to get that information tomorrow. It would be quite a surprise if we got that information tomorrow. 7:45, the ECB interest rate decision. No change expected. A few economists are expecting a minus 10 basis point change, but those are just a few. The vast majority are saying no change. ADP non-farm employment change supposed to show 218,000 new jobs created in the current month. This is in a preview of the non-farm payroll report, which will be released on Friday in the U.S. So market will be watching that. Trade balance coming out of Canada and the U.S. We also get the ECB press conference starting at 8:30. Mario Draghi on center stage. I did a report on that on Forex Live. You can go and watch that video there. We have U.S. unemployment claims supposed to remain a little bit below the 300 level at 298. That's where it came in last month. And we get the revised non-farm productivity supposed to rise by 2.5%. Good for productivity, good for inflation or lack of inflation if you get increased productivity. And finally, at 10 a.m., we have ISM non-manufacturing PMI data coming out of the U.S. with the expectations of 57.3 versus 58.7. FOMC's member Loretta Mester speaks at 12:30 p.m. And tomorrow evening, we have FOMC member Powell speaking. At 8:15, we have FOMC member Fisher, the Hawk from Dallas, speaking, that one. And at 9 p.m. we have FOMC member Koch Lakota speaking. And all those are FOMC voting members. So big FOMC member speaking day. We are looking at the dollar yen here. Here again, the Bank of Japan kept the rates unchanged, keeping the pedal to the metal there. We did see the dollar yen move below the 105 level in trading, and we had yesterday, and we had a high of about 105.30. If I put the dollar yen on the monthly chart here, the 105.57 level is a 61.8% retracement of this longer term trend to the downside from the 2007 high to the 2011 low. That level comes in at 105.57, and this high in the end of December, early January came in around the 43 level, so got very close to that 57 level, and backed off this month. In fact, yesterday's trade we got up to the 29 level and backed off short of the 43 level, and here's that 43 level here. So we're backed off a little bit off of that level. The bulls sort of remain in charge. We're still above the 38.2 of this move to the upside, but we did have this move below this trend line right here, and been above and below this trend line, which is an old trend line that was broken here and then retaken back here, and now back above and below that level. I would watch up around the underside of this trend line and the 105 level. If we move above those levels, that's more bullish. Also, if we can't get below the 38.2% retracement at the 104.62, the sellers really aren't taking all that much control back from the buyers, and so the buyers remain in control if the market can stay above this level. We have the 100-hour moving average moving up here on each hour, and it should be up toward the 38.2% retracement by the time the U.S. Traders get in, but most of the focus is going to be on that euro versus U.S. dollar. Let's take a look at the Aussie versus U.S. dollar, because this pair is at an interesting point here. We've been above the 100-day moving average at the beginning of last month. We went above it at the end of last month, and here we are in the beginning of the month of September, and we've had a move to the downside, a bigger move to the upside, and a close above that level, and then close above those levels yesterday, and now we're finding support against the 100-day moving average through the Asian session so far today. Here's a 100-day moving average, and you can see how when the market moved above this level, we came down to it in the early Asian session. We held that level, and that forced the market to the upside, moving above this trend line in the process, but finding resistance against the highs that we saw, one of the highs that we saw in last week's trading. Obviously, we need to get back above this level and this level in order to push the market to the upside and back above this trend line, and we haven't had a close above this trend line. So there is the element of sell up here with a break below the 100-day moving average back here at the 93.37 level, giving you confirmation that the high is in place, and then you look for a test of the 100 and 200-hour moving average below. If we're able to get below that level, then there's really a sigh of relief from the sellers, and the buyers start to feel a little bit more wobbly, a little bit more nervous about their long position, and they start to jump on the selling bandwagon through the 100 and 200-hour moving average. So that's how I see the Aussie versus U.S. dollar. Let's take a look at the sterling versus U.S. dollar. I'm going to put it on the daily chart here, and note here the parallel channel trend line or channel here that we have here, and we've been tracking the bottom channel here. Now, at first this tracked nicely with the top side trend line. It started up here, and we just put a parallel line here, and we tracked nicely, just following along. And then we just every day that went by, we kind of went a little bit below it, and just kept the bias to the downside. When we finally got the correction here, where did we go? Right up to the top side trend line, found the sellers, and then earlier this week, the market fell right down to the bottom side trend line, and we came down to the bottom side trend. We're doing this sort of tracking again to the downside. In the process of yesterday's move, we did move below the low price going back to March, and that's somewhat significant, especially while we're watching today. If the market can stay below that 164.61 level, which is that low going back to March, that would be more bearish, and perhaps we get a little bit more momentum to the downside and get below this trend line at 164.25.6. If I were to take a bigger picture and see where we are as far as the pound versus U.S. dollar from the wider spectrum here, going back to the 2013 low to the high that we saw in 2015, we've had a pretty good move to the downside. This is that channel move, but we're still above the 38.2% retracement of that entire move to the upside. That doesn't come into play until the 162.81 level. So if we're able to get and stay below the 164.61 level, there is a chance that we can head on all the way down to 162.81 here before we start to find some, in the next big support level for that pair. There's really nothing through here that says stop right here, but the 38.2 says that's okay. It can stop right there for that currency pair. I remind everybody that if you like this video and want to see more, subscribe to it on our YouTube website at Forex Live, and also if you want 24-hour coverage, 5.5 days a week from the foreign exchange market and the financial markets in general, visit us at forexlive.com. Put in your email address and first name right here. Goodbye. Good luck with your trading. Bye-bye now.